Byju Ravindran is in a firefighting mode. Soon after addressing employees in a virtual town hall, the 43-year-old CEO of the country's most valued startup shot off an email to them saying, "Tough times may test us, but they also reveal our true strength. I assure you that EdTech is here to stay. We are here to stay. We have not come this far to only come this far." But it seems the road ahead is more than just bumpy. Both in his town hall address and in the email, Ravindran has accepted that the company is facing headwinds, and the last few days were particularly rough. The company defaulted on its loan repayment and took the lender to court. Its 3 directors quit without citing any reason, and its auditor, Deloitte, too, parted ways over Byju's long-delayed financial statements for the year ended March 2022. But Byju's Ravindran is confident of tiding over the crisis. He has assured shareholders that the company is on a strong footing. He also stressed that the valuation of the company was intact at $22 billion. But Dutch-listed technology investor Prosus NV recently slashed the valuation of Byju's to $5.1 billion. It is a drop of over 75% from the startup's $22 billion valuation last year. Meanwhile, reports have emerged that Byju's is in advanced talks with prospective new shareholders for a $1 billion fundraising round in an attempt to sidestep a revolt by some investors. The EdTech startup is offering benefits to potential investors, including preferential treatment in the case of liquidation, the report said, adding that none of its existing shareholders have a so-called liquidation preference. Byju's seeks to close a round within 2 weeks, according to media reports. Ravindran assured employees that the Term Loan B dispute may be resolved without court intervention. He also insisted that the board member resignations were a mutually agreed upon decision and are unrelated to Deloitte's resignation. Ravindran's claims that the company is close to achieving profitability at group level cannot be confirmed as the firm is yet to file its FY22 financials. In the FY21 results, which were delayed by almost 18 months, it reported losses of 4,588 crore rupees, 19 times more than the preceding year. In the last 1 year, the company has laid off close to 3,500 employees in its bid to become more efficient and profitable. So, has Byju's really understood and acknowledged its problems? Is it ready to rectify its mistakes and face its challenges?
Just by acknowledging them, it is not clear what indications they're sending to media or its stakeholders for it to acknowledge. The problems are fairly deep in that sense. So it is not clear how they will raise new funds. So they need to raise new funds at whatever low valuation possible from new investors, 1 or 2 by selling off some business, which is also not going to be easy, which is going to be very time consuming.
Byju has understood that it is not possible to remain non-transparent. Their rectification path will have to be a very swift closure of both their 22 and 23 accounts, and indeed should actually get their quarterly accounts audited for the first 2 quarters. I think it is very important that all responsible and large startups get very focused on high quality governance.
And what immediate steps should the ailing EdTech unicorn take to right the ship?
The most brutal thing to do is for the founders to step away, leave the board and leave the company, and for someone else to take charge of the company. That is when there will be honest, I would say, a catharsis, honest change for the company. Otherwise, it's not going to be easy.
Experts are united in their opinion that Byju's needs an immediate board change, both as a positive indication for their employees and customers, as well as the first step in the path to recovery. Whether the company really understands its mistakes and wants to rectify them will depend on how swiftly it takes such definitive steps.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.
He's about to land. She's working her way to the corner office. Business Standard.